Today is Tuesday, September 23rd, 2025, and it is 2 a.m. 2:55 to be exact, and we are in the overnight market. And if you're asking why I'm recording a video this early, well, it's because it's been over 4 days since I posted a video for you guys, and I'm kind of pulling an all-nighter right now. Because my work schedule has been crazy. So it's one of those nights where it feels like if I go to sleep, then I'm going to oversleep. You know what I mean? So I figured, why not in my free time, at least try to do something, at least somewhat productive. But anyways, I am officially at 270K now. And earlier today, I believe I hit 272. I'm not sure why Robinhood is not showing it. I did hit 272K earlier for like a minute, and then it came right back down, and now it's kind of hovering around 270. But the last 3 months, I am up over 50%. Year to date is 118. Past year, which is 12 months, 228%. And then all time is 440. And just to give a quick update of my recent transactions, I did get my VFC dividend, and yesterday I did go ahead and sell another covered call on Robinhood, but this one is going to be all the way up at the 160 strike. So as I know I've said this before, and if it actually does hit 160, I will probably still feel bad about selling it. But at the end of the day, I can't be too greedy. I'm already, in my opinion, a little bit in that greed space, just because I don't like to cap my gains. I don't like to sell covered calls. It makes me feel, I don't know, a little iffy. Any of you guys that have been my long-term viewers will know exactly why I'm a little bit iffy on covered calls. But I figured I shouldn't be too greedy. It does feel like we are getting towards the end of a cycle. So I don't want to run the risk of getting margin called or leaving a lot of money on the table, right? Not taking profits when I have the chance. And then let's say, I don't expect this to happen, but let's say the next 3 to 5 years we're stagnant or we're in a very serious bear market, and I could have taken at least a little bit of profits when I had the chance, but I didn't. And then I just regret it for 3 years. I don't want to be in that position. A lot of you younger guys, maybe just starting out, 18, 19 years old, maybe you don't have that fear yet because you don't have that experience. But I will say this, it is not the best feeling in the world. Just to kind of give a brief rundown, I'm not going to spend too much time on this because I did go over this already in some older videos. So I don't want my longer term viewers to be bored of this. I mean, it's my videos are already pretty much boring, but so I did deposit roughly $50,000 throughout my entire investing career, and as you can see, started at around 2019, and I was stagnant for many years, right? So all the way in 2023, I was actually dipping into the red. So starting from 2019 all the way to 2023, I was dipping into the red. So that's just, I guess, a little warning for you guys. Like I said, a lot of you guys might be 18, 19, 20, just starting out with your investing career. And I just wanted to show you exactly what could happen if you don't take at least a little bit of profits towards the end of a cycle. A more recent example of this is actually this year. Even though it hasn't even been a year, it was only a couple months of a correction, which was Liberation Day, obviously, this year in April. I was actually over 100K. I was at 170K, and then I dipped all the way into, Robinhood is saying the 80s, but it was actually the 70s briefly. But I did dip into the 80s, all the way from 170. So I'm just showing you guys this. A lot of the younger guys that haven't been through bear markets yet, it can get pretty ugly. So whenever you have the chance, be grateful for your profits. Obviously, you don't want to cut them too short because For example, if I would have cut my profits too soon, especially with Robinhood and Palantir, let's say I cut it at around 170, right? And then I just hold it in cash, just collect interest, waiting for a bear market to happen. Well, I would have been stuck at 170, right? Instead of 270, which is where I'm at right now. So you see what I'm saying? You don't want to cut it too short because you can cap out all your gains. But at the same time, you want to recognize where we are in the cycle and be grateful for your profits. Don't be too greedy. So that's why I'm kind of selling gradually selling covered calls into this bull market and what I believe is towards the end of a cycle. But anyways, let's take a look at my account. Well, the overnight market, it looks like we are going to go into the green territory. Looks like the market is going to do just fine. If we take a look at my equity, Robinhood is just a ridiculous amount of my portfolio right now and my overall net worth. SoFi has also risen very quickly. Any of you guys that have seen my videos for a while now, you'll know that SoFi was actually the same amount as PayPal. So PayPal has been an opportunity cost for me, and it's somewhat been a drag on my account. Not really, because 6,000 compared to 270, it's not really a big deal. But SoFi, it was at that same level with PayPal, but now of course it's all the way near the top, and it's now my top 5 holdings. So I'm very happy and grateful to all you guys. If somehow there is somebody that works at SoFi watching this video right now, I appreciate you. Just like all the guys that work at Robinhood, I appreciate you. All the guys at Palantir, appreciate you for making me a lot of money, putting in the hard work, because you guys are the ones that clock in every day. You guys are improving the product, right? Robinhood, you guys are constantly improving the app. Palantir, you guys are constantly getting those contracts. SoFi, of course, you're constantly improving the bank. So if somehow any of you guys that work at these companies are watching my video, just wanted to say thank you. And briefly, if we take a look at my Roth IRA, year to date, I am slightly above 50%. I was almost at 100% this year, but unfortunately, AMD, I guess I held it a little bit too long, depending on your point of view. And of course, all time is going to be roughly the same, just because my Roth IRA was started very recently. And as you can see, most of it is in cash because my buying power is 1,100 right now. And if we take a look at some of my holdings, not much excitement here, nothing too flashy. I have REPX. A lot of my long-term viewers will already be familiar with this somewhat. Lemonade, of course, it's done tremendous this year. American Express, I only have a fractional share. I'm working my way into a full share, trust me. And my kind of funny, newer position, I only have 2 shares. It's GRND. And all I'm going to say is, if you know, you know. And like I said, it's kind of a funny holding just because of, the actual product of what they sell, which is a dating app for the LGBT community, if I can speak. But I've already talked about this in a previous video, so I'm not going to touch on it too long. Pause. But I also have EWZ, which is a Brazil ETF. It's done very well this year, up 22%, not including the very high dividend yield that my very high dividend yield on cost, sorry. And then, of course, I have a lot of clothing stocks that have done very well. I've pretty much sold off all of it, but just keeping 3 shares basically as like a souvenir. Not really. They do pay a dividend, so I just kind of keep it around, but it's not a real big portion of my IRA or my net worth. And now we get to the fun part, which is to read your guys' comments. It's one of my favorite parts of the video. It's kind of a tie between seeing how much money I'm up on the day and reading your guys' comments. I think reading your guys' comments is above that like it's my number one most exciting part of the video. And then I would say it's looking at all of my gains. But we have Luke Strat saying all in on Grinder LOL. And like I said in my last video, I'm not going to go all in on this one. It's just some similarities that I'm seeing within that stock that I've also seen in some of my top holdings like Robinhood, right? Just the technical setup and fundamentally on the financials, I'm kind of seeing a turnaround. I don't know a whole lot about the company. Obviously, I'm not a user of the product, but it's one of those, like, I guess, speculative positions. And we have Eglo. You ask, how much margin are you using? And it's roughly between 60 to 70K. It's not financial advice. I actually think most people shouldn't be using margin. So if you are asking me how much margin I'm using to copy me, I'm just going to say right now, you should not be copying me. We have not financial advice saying, dude, just retire, come to Miami. I don't think I have enough to retire just yet. We have TES saying taking profit could be smart. Those gains are super impressive. I believe in Hood long term though. And it's basically what I've already talked about earlier in this video, so I won't spend too much time on it. But you also say, I think I found some insider info on September 12th. I noticed Nancy Pelosi and Lisa McClain, that sits on the House of Armed Services, both bought a chunk of BBAI. Lisa bought Palantir at 30, so she has a decent track record. And insider info just found out recently, wanted to share in case. And like I said, I hope you guys make money in all these stocks that you guys recommend me. But as I've said in a previous video, I don't know much about BBAI. And when it comes to, I guess, like these secondary stocks, I don't like to mess around with them too much because I like to focus on opportunities before they happen and concentrate my bets on the players that I think are going to pioneer that move, if that makes any sense. Like Robinhood, a lot of people were saying that Webull stock is going to have a move like Robinhood just because Robinhood is a brokerage and it's done very well, obviously. But I don't like to invest like that. I like to look for opportunities before they happen and then just position myself in what I think are the top players. So when it comes to AI, obviously my pick was Palantir and it did very well. I don't think I'm going to play like a secondary bet on AI. Maybe I should, just because my entire position Palantir is up for collateral and it's most likely going to get sold off. But I don't know. Maybe I'll look at BBAI in the next video. But I appreciate you commenting that. And we have Anton saying, if you use margin to sell cash secured puts, you won't have to pay any margin interest unless you're assigned past your portfolio value. So that is a potential way to get that margin exposure, but you won't have to pay the interest because it is only collateral. And yeah, I already knew that, but when it comes to playing with margin to sell cash secured puts, you have to keep in mind, if we do have a serious correction or a bear market and all of your shares or most of your shares get assigned to you at the same time, your portfolio value is going to crater because you're going to get slammed with so much equity loss. And then because you got assigned shares, you're going to have to start paying interest during a bear market and during a time where potentially your income is a lot lower. So you have to keep that in mind when you're playing in the options market. And in your response, I see that you said you can always just roll it out to manage it. And that's kind of what I did with my Nike cash secured put. I've had that for a very long time. If you look at some of my old videos, you'll also notice that position is there and I've been rolling it out, I want to say, for the past year. And obviously it's a very manageable position, only 7K in collateral. So it's not a big deal, but also I don't think I made that much on it. Maybe like $200, $300 off of 7K. Obviously that's like what, 5%. 5% return. So it's, nothing too crazy. And it is on collateral that I didn't have to pay interest for yet. So it's not so bad, but to me, it's just not as exciting. And I also see that you responded by saying, You can use a manageable amount of margin, like 20% of your account value. And, I think that is a good rule of thumb to go by. But also keep in mind, if you have a very volatile account or a very concentrated account, and we enter a bear market, so your account goes down more than the rest of the market, your account could potentially still get margin called just because your account is very volatile and it's dipping a lot harder than the rest of the market. And finally, we have leveraged finance that asks, do you know the FIRE movement? What is your monthly rent? I'm pretty sure FIRE stands for Financial Independence, Retire Early. I guess that is kind of what my goal is, but I just don't promote it as much, I guess. I don't put FIRE movement in my thumbnails or the titles of my videos, but I guess that is somewhat basically what I'm doing. The only reason why I don't like to put myself in these groups, these niches and labels, is mostly because I don't want to get lumped up with the rest of the group. And I also personally don't agree with a lot of what other people are doing, which is normal. We're all humans. We all have our own strategies. But like, for example, covered call ETFs, I do not agree with them. I think people should stay away from them. Obviously, I'm not a financial advisor. That's just my personal opinion. I think covered call ETFs have some periods where they outperform the market, but holding on to not a cash put, but a covered call ETF just because it sometimes outperforms the market is not a good strategy, in my opinion. I think most people are much better off just, automating their investments, like basic ETFs, QQQ, SPY, just very basic stuff, depositing money into it like every month or every week, and just collecting dividends, but actual dividends, not a dividend from a covered call ETF, which is just option premium. I think people are much better off just automating their investments. And then if they want to learn the options market and covered calls, then they can start like a small position. Like, for example, let's say they buy 100 shares of Nike for $7K and they want to wheel Nike just to learn and gain some experience with options. That I think is a much better way of going about it, rather than just dumping your life savings into covered call ETFs that completely cap out your gains and somewhat trick you into it by giving a very high dividend yield on paper. And when it comes to your second question, I won't give you the literal amount. I'm not going to tell you the actual amount, but I will say it is almost half of my monthly paycheck. So take that for what you will. It is almost half of my monthly pay.